I'm Ashton from EventChain.io for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Tim Picciott, a financial planner specializing in the cryptocurrency industry. It's a pleasure to have you on the show today, Tim. Thank you for being here.
No, thank you, Ashton. Pleasure's mine.
Awesome. So if we could start out a little bit with how you got into the crypto side of financial planning. And I heard that you had to quit your job just to speak at a crypto conference. If we could get the backstory on that.
Yeah, so I mean, I've always, probably since about 2009, 2010, I got into, at least in America, we had the Ron Paul movement. So I sort of got exposed to the libertarian, end the Fed type movement. And so I was concentrating more on the end the Fed movement, which is unusual because I came from, I was in a class that won the national competition on the Federal Reserve. And now here I am, railing against it. So that was really my first exposure. But, I found out about Bitcoin at about $3, but I, outsmarted myself and didn't get any. And it was really when I found out about Ethereum and smart contracts, that's when like the aha moment came to me. And I realized, well, hey, there's, a lot more to this than people just, passing around, fake money back and forth, not to offend anybody, but to the average person out there who hears about Bitcoin for the first time, it sounds ridiculous. And then I found out about smart contracts and it really just blew me away. So fast forward, I guess it's be 8-9 years later, I'm at a pool party with a early crypto adopter, Ernest Hancock, he was, I think, the second radio show host in America to start interviewing all the crypto guys behind Ian Freeman of Free Talk Live. So, Ian Freeman's the guy that got Roger Ver basically interested in Bitcoin, and Ernie wasn't too far behind him. So Ernie, he's out of Phoenix, and I was at his house, and he knew me as the financial planner guy, and he's like, hey, we got a bunch of rich crypto guys. This is last August too. So, this is before the major run up. And he said, hey, what strategies can you do for these crypto guys in terms of like tax loopholes and different, tax planning strategies? And so I, thought about it for a little while, and I knew what I would do for someone if they came to me with, a ton of money in the traditional markets, but not necessarily Bitcoin. Fast forward, basically a week later, and I'd made the connections and found out how to basically get everything done. And basically, fast forward a few months later, I get introduced to Jeff Berwick of the Dollar Vigilante, and got invited to speak down at his conference. And my broker dealer at the time, which was the largest independent broker dealer in America, so not like a fly-by-night operation, they actually banned every advisor in America from speaking about blockchain. And that was right before I was about to give my talk on blockchain. So meanwhile, I had 6 figures coming in from a business I built up. I was a 1099 independent contractor. I wasn't even an employee. And I just told them, hey, I'll quit the broker-dealer side of things, stay with the registered investment advisory that I was with. And then about a day before the conference, the registered investment advisory I was with then told me, we don't want you speaking here either. So then I had to quit that. Luckily, I had already been developing plans, kind of thinking that this might happen. Because what I did was I also, and this is kind of jumping ahead a little bit, but I got a hold of some guys who they specialize in what's called self-directed IRAs. And this was actually not even at a crypto conference. This was at a financial media conference that had nothing to do with Bitcoin at all. Got introduced to this guy, Kirk, who specialized in this area, and we decided that we would team up. And just unfortunately, it ended up taking the state of Arizona about 5 months to approve my paperwork, which meant that I was without a job for 5 months, thinking that it would take, an afternoon to get approved like it did the last 2 times I'd left to go to, to advance my career. I was thinking, but apparently when you have, self-directed IRAs and crypto IRAs and how you're going to destroy the current financial system, they don't like move you to like the front of the stack to get you, front of the line is what I found out. So it's been an interesting experience, but, so no one could say that I haven't paid any dues or haven't had to, I'm not just, like some of these guys who, all of a sudden are coming out when Bitcoin's at 20,000 and all of a sudden they're touting themselves as, to be like the experts. And no one obviously knows everything about this. Because the space evolves, so rapidly, as I'm sure you're well aware of.
I definitely agree. It's evolving ever so rapidly. And especially now that people are starting to incorporate it into traditional finance in the United States. I'm sure you're well aware of, you've been working in the industry for a long time, and now more people that are looking to get into Bitcoin and into cryptocurrency that are normally in the stock market, they have no idea how to own their own coins, and they're just looking to add it into one of their pre-existing funds. So maybe if we could touch a little bit on some of the traditional financial assets that you know how to manage with cryptocurrency. I think you touched on self-directed IRAs, but let's just roll back to trusts, because a lot of more people are familiar with trusts. Can you speak a little bit about how cryptocurrency is incorporating with trusts and what people can learn into those tax loopholes and saving taxes on their earnings?
Yeah, absolutely. And first off, I just want to say that a lot of this stuff, if you really want to dig into the weeds, it gets very, very technical. So I did give a talk that I mentioned down at the Dollar Vigilante Summit that, I mean, in order to get there, I mean, you had to get to Acapulco, Mexico, which is one of the most dangerous places on earth, supposedly, to get to. And it was like a $500 ticket. So if you go to thelibertyadvisor.com/cryptocoin, just for your listeners, I have 2 investor guides on both the self-directed IRAs and on the estate planning that gets into a much deeper dive in all this. And I have a 15-minute presentation that I gave at the TDV Summit, and then I have an hour presentation that I gave that digs into this even more. So, you know, you don't have to necessarily take notes on this stuff, and today we're only going to hit the highlights. But what a lot of people don't realize is there are charitable trusts, and when you see all these guys like Warren Buffett and Bill Gates, and they say they gave away all their money, well, I got news for you. They didn't really give away all their money. And if people actually knew what the tax system was like, I mean, the question would be almost like, why wouldn't you want to put your money into one of these trusts? So you can put your money into a charitable trust, and the charitable trust pays you. So you put your money in there, you get a massive tax break for putting your money into there. Your money grows tax-free while it's in there. You can diversify into other assets. And so what I did was I had a scenario, and again, I'm just speaking at like the highlights of this right now, but I used a 55-year-old guy who put $15 million of crypto into one of these trusts, and you don't trigger any capital gains. And so you get it close to this guy in particular would have gotten close to a $5 million tax break for doing this. So unfortunately, I didn't have my company up and running because when I thought of this, and by the time I wanted to get it up and running, it was, the massive mania had already kind of already happened. But now, just that $5 million tax break is probably worth even more than a lot of people's crypto portfolio. I mean, obviously it's worth probably way more than almost everybody's crypto portfolio. But in this example is, the tax break alone would probably be worth even more than what people's than the amount that you put into it, because everything has gone down so much. So this is a way for somebody to diversify their assets. I mean, you don't have to, but it could be a way, whether it's other cryptos or other businesses, but you could diversify your assets, not trigger any capital gains. And long story short is that person that put the $15 million in, I used an example where they're pulling 5% out a year. I just kept it at $750,000 a year to make the math easy. And long story short is, if this guy were to pass away at age 90, he would have been able to, and assuming a 9.5% growth rate, he would have been able to transfer about $193 million upon his passing. And a person that didn't do any of this planning, and I, assume that they would earn a tiny bit more to, take into account some of our fees over here, they would have passed on $57 million less to their heirs. So, I mean, you got 57 million reasons right there of why you might want to try it. And again, and there's many different, trust is a very generic term. So it's sort of like saying, crypto or Bitcoin, but you mean different cryptocurrencies. There's a whole big wide array of things that can mean. And depending on your age and your situation, what worked out for this guy wouldn't necessarily work out for you. It just, really kind of depends on your own situation and working with a planner that really knows this stuff inside and out. And that's why Ernie came to me as a financial planner, because he knew that and a certified financial planner at that, which is, not a very easy thing to get. I was probably one of the youngest people in America to ever get that. And to have somebody like me that philosophically believes in all this stuff, and the Fed guy who, knows both sides of the coin, no pun intended, it really would behoove people who have large gains, whether it's in crypto or not, to learn these types of strategies. Because there's 2 tax systems in America. There's one for the informed and one for the uninformed. And so it's time for you guys to get informed. So
that's great, Tim. Yeah. It rings very true. And that sounds like a heap load of savings, $57 million. So the average investor in the cryptocurrency obviously may not have that much money. And is it just as worth it for low to mid-range investors to also put their crypto in a trust?
I mean, you probably want to have about like a seven-figure type gain before it really starts making sense, because what you're doing is you're drawing an income from there. So it depends on how much income you need to live off of. So, really kind of, take 5% of whatever amount you want to live off of. So if you want to live off of, $250,000, and you've got to have 5 million in the trust to be able to pull that out. Now, I mean, without getting too technical, and again, if you want to get more technical, then you can go to thelibertyadvisor.com/cryptocoin, and then you can get as technical as you want with all the stuff I've got in there. But I mean, the higher percentage that you take out, then the less tax break you're going to get. So there's all these different variables that go into this. But I would say if you're a little bit older, I mean, if you're like 65, 70, 75, it could probably make sense for less than that amount. Or if you need to take out a big amount to fund something, there's other strategies that don't necessarily involve trust, that involve certain types of foundations that might be worthwhile as well. But I mean, if you're sitting on like $5,000 of gains, I mean, it's not going to be worth it. But I don't make the rules. I don't make the rules on it. Yeah.
So, well, for most people, I'm sure there are definitely ways that financial planning, even for low and medium range investors, that you can save a bit. So it's always good to be informed, because information is key, right?
Absolutely. And that person that's I mean, there's a lot of people who invested, $1,000 into Bitcoin who, were a low investor who are now, multimillionaires. So, I mean, and it's not to say that some of these projects couldn't be worth a lot of money in the future. I mean, there's obviously a lot of crap out there. But I mean, just look at people who would have panicked and would have sold Apple back at the low. I mean, there's people that sold Apple at $3, $4 after the crash, and now it's a $1 trillion market cap company. I was thinking of Amazon was at $3, and I think Apple wasn't probably too far away from that.
Yeah, both $1 trillion companies now. Pretty amazing.
Yep.
So one interesting dichotomy in the cryptocurrency industry is that a lot of people are in cryptocurrency because they want to hold their own funds. They don't want anybody else to control their funds, and that's sort of getting away from banks and other financial intermediaries holding funds on your behalf. When you go into trust, don't you sort of go back to that place where you were with the banks? However, it is about trade-offs, and if you can have tax breaks and it's worth it, then it may be worth it. But do you see that issue arise for many people that are in cryptocurrency?
I mean, you sort of skipped ahead to the next section where we get into the self-directed IRAs, and that's where that's really prevalent. But depending on what type of trust you're dealing with, in some cases you can actually be the one that holds on to your private key, and in other types of trust you won't be. It really just kind of depends which one you're dealing with. But the one that I mentioned in the first example, in that case, that gentleman would be able to hold on to his private keys legally if he wanted to. So
okay, well, that's good to know, because a lot of people think that they just think, oh, it's a trust, it's going to some other entity, and maybe I don't have sole control over my funds like I would want in the cryptocurrency industry.
Yeah, and again, trust is such a large nebulous term that means so many different things, and there's so many different types of trust. I mean, there's charitable lead trust, charitable remainder trust. There's I mean, it would just blow people's minds at all the different types of trust. And most advisors, I mean, forget about crypto, don't even know all the ins and outs of these different. And I don't know the ins and outs of every single one of these, but that's why I've teamed up with a guy who basically helped start what is known as the donor advised fund space. So I had that pool party at Ernie's house, and then literally 2 days later, ran across this guy of a father of a friend who I didn't even know what his dad did. And he's like, hey, I need to introduce you to my dad, and finds out that his dad basically started the donor advised fund space that before it even had a name that then Fidelity ended up ripping off. So I've got really good contacts on that side, and I've got really good contacts on the self-directed IRA side as well to really bring this type of information to the masses. But one important thing is, since you are getting a big tax break, you want to make sure that you're kind of, obviously, sell high, because, if you think that Bitcoin or your crypto is going to go a lot higher, then you wouldn't want to necessarily put it into the trust now, because the tax break is going to be predicated on the amount that you put in there. So, but if you're looking at like leaving the country or renouncing citizenship, I mean, there's all sorts of different use cases for this type of knowledge and for this type of planning.
That's awesome. So we don't have too much time, so let's go through a couple more topics. We can dive into Bitcoin ETFs and futures a little bit at the end, but first I just want to quickly go through the self-directed IRA that you mentioned and how it differs from the trust.
Yeah, so what I saw was in late 2016, there was a lot of people who I had talked to who had cashed out their 401ks, cashed out their IRAs to buy Bitcoin, which, looking in hindsight, was a great move for them because they ended up making a bunch of money. But what they had to do is they had to pay a 25% income tax, and they had to pay a 10% penalty. And so I was like, well, if you're going to pay a 10% penalty, you might as well do what's called a Roth conversion. So that's where you take your retirement funds, and by moving it into a Roth, you avoid a 10% penalty, but the gains are actually all legally tax free. So I do have an example here where it shows, I'm reading off this, where it shows that I created the example. So it shows that someone who invested, this is January 1st, 2017, they put 100,000, they cashed out $100,000 out of their IRA, a 401k, and a year later, so January 1st, 2018, they would have had $896,000, $415. So, I mean, we're talking close to $900,000 they would have had. So, they're doing pretty well. And so that would have been a taxable gain, though, from 100,000 to 900. Technically, that would have been a taxable gain. However, if they would have done something called a Roth conversion, they would have been able to forego that 10% fee or the penalty, and then they would have had slightly over $1 million. And here's the kicker: is that the gains would have been tax free. So now you now had $900,000 gain that was tax free versus so a lot of the anarchists and the anarcho-capitalists are like, well, screw it, I'm just gonna go cash out my 401k. I'm like, well, good, you're gonna give the government more money, which is less anarchist than the strategy that I'm proposing. And what we're doing through these basically what I found out is that there's one company doing this, and they're charging about 15% upfront to do it. And so you're really looking at the 25% fee from the government, another 10% penalty, plus their the other competitors 15% fee. You're looking at half your money gone right off the bat. And I just thought it was criminal, the type of charges that were out there, which is why I decided to team up with basically the leaders in self-directed IRAs to roll this out. And a self-directed IRA, what that really is just the Cliff Notes version of it is you create an LLC. The LLC is owned by your IRA, and then you can be the manager of your LLC that then holds on to your keys to buy the various cryptos. So again, the big concerns are, well, hey, I don't want to have another institution or another fund or another Wall Street holding on to my crypto, which then leads us into what is probably eventually coming, which is going to be the ETF, which probably won't even have actual Bitcoin in the ETF. It will be these future contracts, which will then settle also in cash. So you're not actually holding on to the crypto. And if you want to do something like that now, you can buy what's called there's a unit investment trust. And so they go out and they buy Bitcoin. They actually hold the Bitcoin in the trust. But the problem with the trust is that sometimes it trades, I've seen it trade at over 100% premium. So if Bitcoin was at 10,000, it'd be like you're buying it at 20,000 because it got bid up. Now the spreads haven't been as high since the futures have come out. But still, you're not really owning the crypto. But by my method with the self-directed IRA, you're actually owning the crypto. And so what we're doing is, and since we are, like I mentioned, I was at a 5-month delay getting this started because of the government efficiencies that we all love so much. But now we are rock and rolling on this. We got our first few underway right now, and so we're actually, for limited time offer for the end of September, not charging any setup fees to do this for people. And we do have fees ranging from 1% to 2% a year depending on what you're looking to do. But here's the big difference: is we can also manage your traditional assets as well, because I don't think everyone should have all their money into Bitcoin. Obviously, it's very speculative. Obviously, it can go to zero. You don't want to have all your eggs in one basket. But I also think that the stock market is incredibly overvalued, and I'm sure a lot of your listeners, understand central banking and probably understand how the Fed works, and those are all kind of like my main wheelhouses of topics that I talk about. But we manage money in such a way where we help protect the downside by buying different types of put options where you can essentially have a portfolio that doesn't have a lot of risk of downside risk in it, but in case the central banks, or when the central banks start printing a bunch of money, you've got all the upside. So I really, if you're in the crypto space, I can help you out from just about every single angle of this, and if I can't, then I can probably help point you in the right direction, because there are a lot of, I'm not saying anything I just said right now sounds easy or simple or you can do it yourself, but there's a lot of traps where if you make one mistake, well then boom, all of a sudden your retirement funds are fully taxable. And there's a lot of little mistakes and basically pitfalls that people can make. And so we're there to basically kind of hold your hand and help guide you through the process. And one last interesting point about this is there's some research done by Tom Lee of Fundstrat that showed you could actually put in between 2 and 10% of your portfolio into crypto, and you would actually have your portfolio be less volatile and actually have much greater returns. So I did do a video on this, a podcast. Maybe I can send it to you guys. You guys can link it later on. But it's called I think it was something like how adding Bitcoin or crypto could actually decrease your volatility in your portfolio, because it's not correlated to anything. So it's actually pretty crazy.
We had tons of great topics today. We'll follow up. We'll send people to your podcast and the Liberty Advisor down in the description below. And let's follow up with some more interesting topics next month where we can dive into where the market is and how we can plan for the future.
Excellent. Well, thank you for having me. Again, it's libertyadvisor.com/crypto coin is an offer just for your guys' audience, where we've got the presentations, got the investor guides, everything they want to know that I've spent 10 years of knowledge trying to put together, that we've got it down for you guys to help out the community.
Great. Thank you so much.
Yep. Thank you. Take care.